Hi, I'm Alan Oster and welcome to the June Roundup Report.
And I'm Rob Brooker.
Well, the Reserve Bank didn't move in June, and why? I think basically the bottom line is concerned about what's happening in the world economy and in particular what's happening in Europe. The Reserve was very much upbeat about Asia, which is where our major trading partners are. But there's lots of problems in Europe and growth is being revised down. People are concerned that essentially that sort of problem will spread across the rest of the world, just like we've seen in terms of equity markets in the last month or so. But overall, I think the Reserve Bank's pretty happy about Australia. Rob?
Yeah, I think that's right, Alan. The Reserve Bank, I think, has been reasonably happy with developments in the Australian economy. Employment's been looking fairly solid. There has been a little bit of softness in retailing, but I think the Reserve Bank thinks that the fundamentals look pretty good going forward for Australia.
Yeah, that's right. And in terms of rates, well, in the near term, I think clearly the Reserve is not going to be talking about cutting rates. So you're going to continue to have very high deposit rates, and so there's opportunities there. However, in terms of mortgages, I think you should assume that the Reserve is on hold. They're not finished.
We've seen a little bit of easing off in the housing market lately in terms of house prices, but I wouldn't count on there being reductions in house prices just yet. There's a pretty substantial housing shortage at the moment, so I don't think there's going to be much respite on that front for a while yet. So that's something to take into account in terms of your planning.
I think that's right. And also, I would sort of emphasise, don't plan that there's no more rate rises coming. You've got essentially a 6-month period of not much. But as you go into the medium term, ourselves and the Reserve are talking about growth rates around 4% for the year after, which means they need to do more on rates. And so we think they'd probably go up to about 6% compared to 4.5% now. But in the short term, I think basically they're sitting back and watching. So we'll look forward to seeing you all in the July Roundup Report next month.